Welcome back to the Cedar IBSI FinTech Lab webinar series to our October edition. Today is an extremely interesting topic. We are talking about risk management, primarily in the areas of RegTech, compliance, and cybersecurity. Over the past few years, these areas have received increased attention, not only from the regulators, but also from the financial institutions and the fintech players. And today we have a really good panelists that have joined us to discuss this. We have Infrasoft Technologies and Mayank representing Infrasoft. Infrasoft is a fintech digital solution provider, which is present across 50 countries, over 450 clients. Mayank is based in Dubai and joins us from here.
Good afternoon, everyone.
Zisis Ziogas from Neurosoft. Cedar joins us from exotic Greece, and he's been complaining it's raining outside, so thankfully he's on the webinar with us. And Neurosoft is a Greece-based company which is into software development, system integration, information security, present in Europe, having customers in Europe and MENA. And last but not the least, we have Murali from Maveric Systems. Murali joins us again on the webinar. Welcome back, Murali. Maveric, as we all know, is present in data technology field, digital transformation, QE, QA, present in 15 plus countries. So thank you very much, guys. Thank you for joining us, and look forward to a good webinar here. Let me start by I'll take a few minutes and lay the groundwork and then hand it over to the esteemed panel. I mean, in terms of risk management, and just wanted to share the roadmap and what people have been looking at and areas that have been covered broadly under risk management over the last few years. A lot of focus came in post the global financial crisis of 2008, 2009. And new risk governance models started coming into play. The Basel agenda came into play a few years later, and that kind of called for improvement in financial risk management, non-financial risk management, broadening the coverage of the entire risk management space. We moved ahead. Digital was the way forward. People started going and increasingly putting efforts into digital, improved services, improved products, and cybersecurity became a top priority. And over the last couple of years, especially in 2020, we have seen a huge amount of digital transformation with the whole COVID environment actually assisting that. And that has even increased the role of risk management, especially cybersecurity and compliance to a lot of parameters that the regulators are putting out there. So in terms of broad priorities, and I mean, not to go into details, I just wanted to highlight some of the broad priorities that major banks are focusing on. Obviously, one of the key issues one of the banks are focusing and financial institutions are focusing on is the financial downturn over the past year and a half. There is an ever expanding ecosystem of risk management. We had to look at transactions now over digital space. We are looking over cloud. We are looking over various channels that the customer is interacting in. We are looking at protecting the privacy and trust. We're looking at cybersecurity. As I mentioned, transition to cloud is a big area with not only services, even software, even platforms moving on to cloud. The automation of the entire data analytics and the business intelligence space. What we want to do while putting risk management practices into place is to do this without disrupting any services and adapting to the global geopolitical situations that we have. Space. We need to obviously address the impact of the economic and regulatory changes, and we need to meet the customized demands of our emerging customers. So in terms of way forward, in terms of risk management, we are looking at the regulatory framework. We are looking at cross-border compliance. We are ensuring financial crime compliance is in place and is being reported, is being tracked, is being monitored, is being caught. The financial stability is very important to ensure that the financial institutions maintain stability. There is a recovery and resolution plan for risk management processes and practices in place. The entire culture is put in place in terms of risk and compliance. The customer behavior and conduct is as per risk management processes. The data and regulatory reporting, which has increased over the last few years, is also put in place. All this in the space of newer technology and innovation coming into play. Just to kind of give you a brief, we at Cedar IBSI monitor and track the various systems being implemented across the geographies. And since risk management is a broad area and there are a number of areas that get covered under the umbrella of risk management and AML, KYC, regulatory compliance, FATCA, so on and so forth, we see over the last couple of years, obviously the system implementations and the number of purchases have increased across Europe, across APAC, across MENA, which clearly shows the growing importance of this space. Even in the Middle East, if you look at it, UAE leads the way in terms of implementations of risk management systems into play. And these are some of the banks that have recently implemented systems across risk management, across RegTech, across cybersecurity, across compliance. And this field is obviously growing, ever important, a lot of resources being put into play, especially to ensure compliance, not only to local regulators, but even international regulators. So just having kind of laid a little bit of groundwork, I want to now hand over to Mayank. Mayank represents Infrasoft Technologies, and he'll take us through over the next 12 to 15 minutes. Mayank, your space.
Thank you, Murtaza. Thank you. Good afternoon, everyone, once again. Infrasoft Technology as a company, we have over 25 years in banking and financial services experience. We focus on this domain, and by virtue of that, we like to believe that we are domain experts in this space. Within the RegTech compliance space, we have over 20 years of experience now. Univius is our flagship RegTech solution, which has 4 key verticals. If we can go to the next slide, please. The 4 key verticals within the RegTech space are catered to from Univius. Anti-money laundering with over 230 implementations across 44 different FIUs. We have a very, very strong presence in that space. Over 200 inbuilt rule repository comes in with the solution, ready rule repository. Within the anti-fraud system, which is the second sort of a pillar of the RegTech space, what we have done is we have used AI and ML to sort of evolve a solution that is capable of not only reporting and detecting and reporting the fraud, but also able to real-time prevent it from happening. So it not only comes with various scenarios, it has real-time integration with the various systems. So it captures information from various system processes it real-time, and is able to detect and prevent fraud. Then we also have solutions in FATCA compliance and governance and risk compliance. We've been rated very well in sales league tables over the years. This year, we've been ranked as leaders in the compliance space globally, as well as in the Middle East and Africa region. If we can go to the next slide, please, Murtaza. So here I have, I wanted to cover 2 key aspects because of the limitation of time. We thought these are the 2 key pain areas where we have sort of done something which is very relevant to the compliance teams. The first one is to try and reduce false positives. So what is false positive here? In my context, the false positives are the alerts which are generated by the system, but do not make it to the suspicious activity report. A global study suggests that only 1 to 5% of all positives alerts which are generated make it to the SAR report. Depending on different banks in different regions, the number varies, but it is definitely over 90%. And I'm sure all the compliance experts in this in the audience would agree with that number. So we also had a bank who came to us, incidentally using our own RegTech solution, AML, suggested that we have a very high number of false positives, over 90%. So I wanted to take you through the process we followed with them and how we tried to sort of, bring in value with AI and machine learning. So just a quick definition on how we arrive at, or how any automated transaction monitoring system arrives at a false positive. Typically in data, the data is divided typically into clusters, and the bigger cluster with some similarity is considered to be the right transaction pattern. And the transactions which fall out are typically the outliers or the anomalies in the system. Using the same principle, or most of the scenarios in the money laundering compliance and fraud compliance space are created. So the rules are created based on this basic principle. However, if you look at the principle, there are certain flaws in the principle. Not all transactions which are part of a larger or similar to a larger group of transactions are worthy, are positive. And all transactions which are reported as anomalies need not necessarily be worthy of reporting to the as a crime. So this is the basic reason for having such high number of false positives. Because if you try to reduce the false positives by managing the thresholds in the scenarios, then the false negatives improve, and then there is a trade-off between the risk of not reporting what is worthy of reporting, and then the amount of time spent to sort the report-worthy transactions out of a pool of alerts which have predominantly false positives. So if you look at the diagram here, this is what in the current scenario, what happens is all the transactions are pooled in. They go through a data transformation. Possibly they go through an entity resolution engine, and then they land up in the monitoring system. Within the monitoring system, all the rules or scenarios which are built in based on either the FIU guidelines or trained on the data of a specific bank, they are applied. And then the system generates a list of alerts. Those list of alerts have to be then investigated by the compliance team. And then a human decides whether this alert is a true positive or a false positive. All through, there is always a risk of not being able to identify and report a false negative, a transaction that has been identified as negative and misses out in this automated monitoring system. So that's a standard AML process. Murtaza, if we can go to the next slide, please. So what we did was we applied a little bit of supervised machine learning to this to sort of identify and make life easier for the compliance team to try and reduce to whatever extent possible the number of false positives so they can focus on more productive tasks. So we applied these the various machine learning algorithms, out of which there is classification like decision tree and regression. We also sort of, because of the advent of so much media and social media, there is a lot of information available on the internet which sort of gets missed. So we also applied some text analysis to bring in some categorization. So these models were trained on the data of the bank's past 1 year user actions. So what we did was we ran through this data through these models trained it on the first 6 months of the user actions which were taken, and then tested it on the subsequent half year to identify how close the system is in prediction. So the system, so the system then, after passing through the monitoring system and applying the intelligent typologies of the AML space, which are inbuilt and they keep evolving, it generates, or it, rather than generating all the alerts, it creates 4 different buckets. The first bucket is the system recommended true positives. The second bucket is the system recommended false positives. The third bucket is the system recommended case creation bucket. And of course, there was a 4th bucket which we kept. Some of the transactions do not have enough correlation with the other transactions for the system to make an informed decision. So those transactions, they land up in the unprocessed bucket. So now these buckets go to the investigation team, who then can validate whether or not, or how accurately the system has predicted. So obviously, because it's a supervised learning system, it evolves over time. So initially, you will see those buckets, the sizes of those buckets moving, and then based on the user actions then taken, there is a feedback mechanism which trains the models further, improves the typologies, and the system can act, it becomes more and more accurate going forward. So this is the exercise that we did with one of the banks in the Middle East, and we managed to decrease the number of false positives to the extent of 20%. Of course, we are considering 1 year data that we used. So it needs a lot of fine tuning to keep going forward. But I think that was a very successful sort of a test POC that we did, considering the numbers that we got. There is one more aspect that I wanted to touch upon in this session, is on the identity fraud. So like Murtaza rightly said, that the digital transformation over the last couple of years have sort of picked up pace, and COVID has pressed upon the acceleration to a great extent as well. And specifically, there are 2 areas which are the biggest concerns for the banks. One is the new payment methods, including the wallet, and mobile transfers and payments. And the second, of course, is the identity fraud. Identity fraud over the last 1 year has caused documented losses of $17 billion plus. When I say documented, obviously, this is only covering the geographies where the reporting is stringent and they are accurately reported. So in my personal humble opinion, this number is much larger than it is on the screen. In those geographies itself, it has impacted more than 5% of all consumers of banking system. So you can imagine the impact, not just in terms of the dollar value, but also in terms of the number of people it impacts. 5% is a huge number if you consider all your banking customers. Predominantly, there are 3 areas where this fraud sort of hits. One of them is, and the major area is the account opening or the onboarding process, where using synthetic identities, the identities are misrepresented or stolen. Then there is, of course, new payment methods and the payment space. And then, the biggest impact possibly is caused, value-wise, is caused by a full account takeover. In the same report, it is sort of highlighted that over 85%, in terms of volumes, over 85% of all identity fraud was impacted in the onboarding process. So we thought we'll just sort of quickly touch upon that space. Murtaza, if you go to the next slide and see how the digital transformation has sort of pressed hard on this space, and 2, how it has impacted the compliance teams to sort of gear up and be able to support their business teams without compromising on the key attributes in the onboarding process, which due to digitalization now asks for one, more speed, two, more effectiveness, three, multi-channel approach, omni-channel approach. So without compromising on compliance, how you can align with the business requirements of onboarding customers within a matter of minutes. So this is on the left, if you see, is a typical onboarding workflow, which is in today's age, we can call it a traditional workflow. So the customer reaches a bank as soon as he approaches the bank through any channel. We've not highlighted the channel here because we think that any channel, the same digital or same journey should be possible across channels. So the customer reaches out to the bank through any channel. As soon as he publishes or provides some of his information, it has to first go and do an AML check through SDN screening, through name scanning. It has to first validate through the AML, and once the compliance gives an okay, then it goes to the next stage. So how this has changed in the digital scenario is people are now reaching out to the bank not through the branches but through their phones. So most banks have to provide a digital onboarding option for their not just millennial customers but everybody these days, especially with the lockdowns and COVID implications. Everybody wants to download the mobile application and open an account there. The challenges come in. There is a lot of open areas where the identity theft can happen. First and foremost is getting access to somebody else's documents and pictures and trying to use them to onboard or open an account. So we have brought in a facial recognition technology, which one, is in line with the compliance, and two, without compromising the customer experience, it allows the customer to go smoothly. So the facial recognition in-house technology that we have checks matches the selfie taken with the document in the record or in the national IDs on 64 different feature parameters, which takes into consideration not just aging and facial hair, but also different camera image qualities and the lighting. The second key aspect comes in to take through is the electronic KYC. In most of the countries where eKYC options are available, like the Emirates ID here in Dubai, we have Emirates ID, then we have Smart Pass, UAE Pass, which enables the banks to use those KYC repositories at the central government level, use those repositories and allow them to or pass on the customer's authentic information. So video KYC allows, eKYC allows you to integrate through all those channels, and we've taken it a step forward to have video KYC in place. What this does is it not only matches all that information, but throws a smart challenge. So the customer, while onboarding, will have to respond to a smart challenge, which is either the application can ask you to move left to right, blink your eyes, speak a number, and then does the liveliness check. So in addition to doing the eKYC and document validation, now there is a liveliness check also in place. The dedupe and SDN scanning obviously is as is in the AML, and it happens. And of course, bringing in information from media and social media, and using it to back up the assumption made by the application. So using these technologies, we've tried to look at it from a business perspective and enable the compliance team to support the business rather than try to anywhere disrupt the seamless flow of customer journey. That's all I had for today.
Thank you
I'm
so much.
happy to answer any
We'll come
any
back to the
questions if there
questions
are.
after we go through all the panelists. So please be
Sure.
there. There'll be questions for
Sure.
you.
Thank you.
Next, we'll move on to Zisis. Zisis represents Neurosoft, and I'll leave the talking to him now. Zisis, over to you.
Hello, I'm Zisis from Neurosoft. I will speak today about targeted cyber threat intelligence. It's a new service that we deliver in cooperation with our partner Blueleaf, a Blueleaf platform. Go to the next, please. Neurosoft is a company who offers three vectors. We have three vectors: fintech services, cybersecurity services. I'm responsible of the offering of cybersecurity, and system engineering services regarding operation of all IT of some organizations. Next, please.
Come on, second.
We are trying to offer, and we are very successful about this. We offer a holistic approach in cybersecurity with prediction solutions, prevention solution detections, like SOC services, and response, like incident response and forensic services if a data breach is happening. You will see that cyber threat intelligence, I have this in red highlighted in the prediction services, because it's a service that we are trying to give to our customers in order to catch up and predict a cyber attack. That's why we are going to talk about targeted cyber threat intelligence. You have mostly the security people have heard the threat intelligence regarding security operations centers, SOC, because there are a lot of feeds, threat intelligence sites and threat intelligence forums who feeds information about cyber attacks in the SOC, in the security operation centers. The targeted threat intelligence, it's something else, it's something more efficient, and it is here to ask specific questions. Let's go to the next, please. In the targeted threat intelligence, we are trying to define who is targeting a specific company, your company, who is targeting your organization and from where. What is your presence in the dark web? We know that internet is only 6%. The other 94% is deep web and dark web. And we are trying to find the information about companies in there. How has your corporate network been compromised? How do you know that your network is not compromised? How do you know that there is no an attacker inside your network? Who is impersonating your brand or VIP persons? Sensitive information, is it leaked out? Do you know that? Credentials stolen? How can you show, how can you know, even now with COVID-19 situation that most of employees are at home, how do you know that someone is not phishing them and that the credential is not stolen? And other questions that will offer us the ability to predict a cyber attack to a company. How do we manage this? We, yes, go to the next, please. We have a security team, threat hunters, and we scour the open, deep, and dark web to deliver targeted and action-enabled threat intelligence services by leveraging Blueleaf's platform. Blueleaf is a threat intelligence platform. We have, along with Blueleaf's feeds, we have over 100 feeds inside this platform, and our threat analysts, in cooperation with the threat analysts of Blueleaf, are being organized and analyzing these threats, daily threats. To the next, please. This platform is a cloud-based platform. It's a very efficient platform. Our analysts, as I told you, in cooperation with international labs team, they reach intelligence, and we are able to deliver specific reports, specific alerts to our customers by using Blueleaf's platform. The most efficient part of this, go to the 25 slide, please.
Yes.
The next one. The most efficient of this platform and our service is that it is modular. so it's cost efficient for our customers. You see here all the modules that we are able to offer to our customers. First of all, credentials. We can retrieve compromised credentials in real time. We can detect malware, specific malware for your organization, and do a malware analysis in order to define who created this malware, what's the target, what is being doing, and if there is an attack for this to use this malware. Credit card theft. We are able to provide service, especially for financial institutions, to not retrieve, but report stolen credit cards. Someone may ask here that mostly banks have taken all the measures in order to block the credit card theft. Okay, but the banks, even if they get a lot of measures, what about their partners? What about their vendors? What about the end customer? This service gives a lot of, it gives the bank the ability to offer it to the end customer. So if I lose my credit bank, the bank will inform me about this because I give them this service. Dark web. We can track malicious activities in in the cyber criminal underground. We can search markets, dark markets in the dark web, and define stolen information about you, which is available in the dark web. Domain protection. We can track rogue domains. When a domain with a misspelled name about the bank is coming in the internet, most probably is the beginning of a phishing attack. So we are able to define this domain and inform the company about this domain in order to take the measures to block this for its employees. Hacktivism. We are able to search hacktivism forums in order to react and be aware of any attack. I can tell you here two cases. One is for aviation company, one is for maritime. We defined stolen flight plans of an aviation company. So we reported it, and the company changed all the flight plan of this flight because they were afraid of piracy. The same is happening with the maritime. We are protecting vessels and trying to define what is happening, who is discussing in the dark web about the names of the vessels in order to predict piracy. Social media, rogue mobile apps. This is you have heard it as a brand protection. We are able to define fake news, social media news, and rogue mobile apps like the rogue domain in order to try to understand and try to deliver to the company who is trying to get money in using your name. Data leakage is a module that we are trying to find what business documents are leaked outside and they are for selling. Go to the next, please. Regarding financial institutions, we have a case study, a major bank. You know that there is a very high price for information from account bank and credit and card data to sensitive PII for the banks. There are cybersecurity regulations and compliance issues. Now, you discussed before that all the banks are going to delivering digital transformation. This increases the attack surface. The digital transformation increases the attack surface because you give new apps, new payment methods, new payment platforms, etc. Outsource systems and services, they increase the level of risk. We need to deliver best and secure online experience to customers, but we need to protect this experience. So the background of the company, of the bank, was that they followed the digital transformation strategy, expanded online services, and the attack surface accordingly. There was a lot of disjoint intelligence for multiple vendors. The bank, it was very difficult to manage these vendors and partners, and there was not a holistic solution. So by cyber threat intelligence monitoring, we deployed it within 2 days. And we covered a wide range of cyber threats obtained by using multiple threat intelligence modules. In the right, you will see the modules that this bank used. These modules you can see in the boxes. As I told you before, we are able to deliver a lot of security services. We have 4 verticals: offensive services like penetration testing and vulnerability management, defensive services like the one that I told you before, continuous monitoring and cyber forensics analysis, risk and compliance consultations. We can offer virtual CISO for cases that there is not a CISO, and all the consulting that you need in cybersecurity. You can go. This is our contact information. You can contact with me in case you need anything in a cybersecurity perspective.
So thank you so much, Zisis. This is, I guess, in the digital age, this is the age of the digital policeman or the investigator to ensure that things are running well on the digital space. No
Yes.
naughty people on the dark web or the deep web, and so on. So thank you so much. It was quite enlightening. I hand the baton over to Murli. Murli from Maveric Systems. He'll take us through for the next few minutes. Murli, over to you.
Yep. Thanks, Murtaza. Thanks everyone for your time today. So what I will try to focus on is the other aspects of, now you have got algorithms, a product from both what Mayank talked about or Zisis talked about. Now how to enable them, that is where we come in. We have Maveric as a company has been working with banks for last 20 years, primarily helping them in their transformation, whatever it is at that particular point of time. We started 20 years ago and we were primarily focused on, how to help banks computerize. So, and enabling them from a point of view of whatever software which is made, this is appropriate for usage. And as things moved on, and currently the age of digital, so the data is the blood of digital, if you will look at it. So what we have focused on is to provide solutions which is providing on-demand data and focusing extremely on accuracy. And I will talk about 3 case studies where our focus is on data accuracy, because algorithms are beautiful. They're based on pure math and things like that, but it is garbage in, garbage out at the end of the day. So you need to ensure, especially when you're doing AML, KYC, CCP. I was going through some of the questions somebody has asked, saying that, okay, how will the banks maintain the biometric information which is maintained or which is there? First is bank need to know that they're storing and they're not copying and things like that. How we do that, I'll cover it a little bit on the case study. So, and to enable that, we partner with all the best in business, and we have a competency through a data academy, and similar to the lab which Cedar has, we also have a Datatech lab where we work on some of the newer technologies which most of our customers use to test out either architectures or proof of concepts and things like that. And we have extreme depth in in terms of working with 3 of top 20 of world's banks, and they use us in their extremely advanced programs. The case studies I will talk about are from there. Yeah. So I'll quickly touch upon. So we have organized ourselves as there are 4 solutions. Out of them, one is data for complaints. I'll talk about that, but we do have solutions around when you're working with fintech. You need to ensure that accurate transfer of information and integration of information which is there. There was another question which was related to how do you manage when information is given to fintech and it is not misused and things like that. There are solutions which are possible. And in terms of data migration, you need to have some legacy systems, and they need to work with the newer systems which Mayank will bring in, or Zisis will bring in, and they need to co-work. So some data need to be migrated. You need to ensure that it works in a seamless manner. That's where we come in. And in 5 areas where it's to build all the big data pipelines, or you're trying to build dashboards or advanced analytics and data governance, which is where we place compliance as a part of. So we do customized services also there. Yeah, go ahead with this. So when we are looking at in terms of data for compliance is one of the solutions which we provide. When you're looking at what is driving the compliance, I don't think banks set out to be compliant, but that is the requirement which is there, because as we are doing more and more digital, the questions which were asked by some of the participants, they become very apparent, and there is increased compliance in all regions. It is, like what Murtaza talked about, have gone through a lot of advancements. Then the programs or software and systems are becoming extremely complex. Not everything is served by the bank. There are fintechs which are doing part full fulfillment of the product or the customer's experience. Then there are stringent implementation timelines where you have to do this, within this particular point of time. Otherwise, you're not going to get the license. And most important change in the way in which world is looking at, again, reflecting on the three questions which came up, is all about customer is the owner of the data. Whatever we are doing, we need to tell the customer, and you need to be prepared for that. And that is a key requirement all over the globe. And data protection, which is some part is theft and misuse, which this will be using, or some will be intended misuse by the customer, both ends of the spectrum, but data protection is a necessity. And the challenges which come in because of, most of the time, these are piecemeal system integrations which happen. So data lineage is no clarity there, or multitude of technology. Something is working in the newer technology, something slightly earlier. Then sometimes what happens is that a lot of inaccurate transformation which happens, which might work in one particular scenario, the same data which can be misused or abused when it is used in another context. And it's not properly modeled, and most importantly, data quality. So what we have gone ahead and done, used our 20 years of experience and build a data model. And we can, whatever the data which is used in banking typically, it is available as a meta model, and we use that for driving most of our work, whether it is to drive data quality or ensuring that we are doing ETL, or we are doing any of the analytical work which is done. And we have worked with many years of experience in fraud, AML, CCPA, KYC, working with some of the large banks in their global programs, which is covering in one of the programs we worked in 20 different regions in Europe and North America and Mexico and Asia, to ensure that their fraud was fully compliant. And that's the kind of experience which we bring in, and working with some of the product companies like what Mayank represents and Zisis represent, we end up providing a holistic solution which is entirely focused on 100% compliance accuracy. So whatever you are reporting, either to the authorities or for your internal audits or even to the customer's commitment, that is 100% accurate. You never have to take a hit on your authenticity in terms of going and changing your stance, saying that no, maybe that would have happened. Yeah, we can go ahead quickly, Murtaza. I'll try to. Yeah, so we do compliance advisory, implementation, and managed services, and then we do some compliance audit and interfaces. So we have experience of working in GDPR, which is the personal data protection, which is in Europe, KYC primarily in North America, AML globally, and CCPA, which is we will call it as GDPR 2, which is the California Consumer Privacy Act, which is most likely going to be a North America Act, and typically it follows, and all of them start adopting that. And we have worked in all the four areas very extensively. Murtaza, please. Yeah, so I'll quickly walk through the case studies, taking only the salient pieces. If you want to get deeper, we can go deeper into any of them. So this is one of the banks which wanted to fully compliant on CCPA, because CCPA came as an afterthought after the debacle with going to cloud by one of the large banks in North America, and then suddenly California woke up and said that no, you need to be compliant in a very aggressive timeline. So they had built the pipeline, but whenever they were testing, they were finding there is either additional data or many of those things which are there. So we went in, and using our domain model, we could reduce the timeline than what they had looked to implement. And this is ensuring that all 100% of the data is validated. We have verified whatever the rules they had set, and we could deliver it within the time frame, and it is a gold standard within the bank now, and we are getting a lot of kudos on that. Again, same methodology. We have the domain model, and we know what the rules, when CCPA puts out rules, we map it to our domain model, and we know their entire metadata, and we could come back and say that, okay, these are the places where it is compliant and where it is lacking. Go ahead. Next, please. So this is in the anti-money laundering where, which again with one of the Fortune 50 banks, this was a multi-geography, in 4 hubs and 124 countries they were covering. We did a large part, which is a package implementation, but ours was to understand the requirements. So they had the algorithm, which was bought out from one of the leading providers, but we were involved from the requirement all the way to signing off, saying that, okay, whatever has been asked as a part of AML, we were in a position to deliver. What's the next placement? So this is the other one when, KYC is a large, question, especially since these days, a lot of fintechs are getting involved in fulfilling some parts of it, if not all. So how to do it? And, most of the time, 2 challenges. One is, are all the things which are met and all the information requirements have been met, and is it accurate? So, there were a lot of gaps, and this particular bank was also, paying some fines to, regulatory authorities in terms of some gaps which were found. And we could trace it back to, the way in which they were doing the validation of the data and validation of the system. Again, trace back to where the gaps were, and we could cure. And we reduced the data defects by 95% and 100% of the coverage, which was built into the system. Earlier, the system will run, and then there will be, as an afterthought, there will be an audit. So we merged the audit and data processing together, and we could come back with around 95% reduction, and also some pointers over a period of time. It's in a continuous improvement path now. And that is what I wanted to talk to you about, saying that, yes, one part is to have choosing the appropriate product, appropriate partner who is coming back with algorithm. You also need a partner who can take care of it from the implementation and your consuming side, who understands the relevance of this in banking, and that is where Maveric comes in. Thanks, Murtaza. That's what I wanted to talk about, and this gives some benefit of the program. It's a fairly large program, and just on the basis of this, our involvement in the bank has become a 3-year contract, and they are giving us the entire customer data management oversight, and we are doing as a part of this. Yeah. So this number speak for itself, and I'll post there. Yeah.
No. Thank you so much, Murli.
I'm going a bit fast. If there are questions, I'll take it.
No. Yeah. So what we'll do now is that we will just go to the go through some of the questions that we can go that people have been asking, the attendees have been asking.
Sure.
So one quick one. This is to Zisis. So as far as cyber crime and so on, is it always a case of where we are playing catch up? We are waiting for some kind of newer process or methodology to be found, and then we are ensuring that does not happen anymore? Or how do we manage proactively in terms of ensuring?
Listen, we deliver this service by two cases. First one, it is the assessment, threat intelligence assessment. We run an assessment to see what was happened until now, and we run all the modules in order to define stolen credentials, stolen data, etc. So we define and we report what was happening in the previous years. But in order to be well-oriented, this is a monitoring service, and we need to define the modules that they are for us, they are for our organizations, and monitor day by day this service, the cyber threat intelligence. We know that cyber attack will happen. Either now or in the future will happen for all companies. Okay, this is something. We call it the cyber pandemic nowadays. Cyber pandemic, along with COVID. So we need to be ready in order to predict cyber attacks and get this knowledge into our defense systems, into our internal security operation centers or the security operation centers that we are operating with.
Okay. So that is fine. Murli, this one's to you. So what we've been seeing also is that banks are implementing a lot of systems, processes, procedures proactively to prevent a lot of these risk management processes.
Yeah.
Despite that, we've been seeing a lot of banks being penalized, fined in the news on a regular basis.
Yeah.
So where is the mismatch there that you're seeing?
I don't think it's a mismatch. See, for most of the transactions have gone digital. If say for example, if your password was compromised 10 years ago, you would have overlooked it. Maximum what will happen, somebody will know the your account balance. But these days, if it gets compromised, you're nearly, you can be bankrupt within few seconds. And another thing also which is happening is, as and when you are building newer systems, the cyber crime also is advancing. There is let's not underestimate the intellectual capability of some of the cyber criminals in the dark web. So as and when you are doing so, it becomes a intriguing game, which is getting played, and also regulatory is also advancing. If you have looked at the speed at which the regulatory regulations are changing. Again, you look back 10 years ago, the last change would have been maybe once in a decade, once in 5 years. Now you are having each of those things being reviewed, looked at. So we are at a place where it will reach a steady state, like SSL kind of change, or HTTPS kind of change the way in which e-commerce was done. We are slowly moving to that kind of a space in banking. What that exact thing is, we will know in maybe in a year or two. But it is much more secure now, though these are coming into the fore now, and banks are and regulators are also becoming punitive. Earlier, they would have overlooked and they would have let someone go with a caution or a warning. Now they are taking act and they are ensuring that it is weaved into the P&L of banks. So it's a series of these facts, and it is it's a matter of time before it will become as good as nowadays. Nobody thinks twice before sending even a cryptic or a very sensitive information on WhatsApp. You know that it's secure, right? Earlier, some of us would have done the same thing in SMS, not knowing clearly that anybody who is listening on the air can see that, right? So it is that kind of a maturity which we are going through, and it will continue maybe for a couple of years, and before things will become extremely stable. I don't know whether it's a blockchain moment, or it is some other things which Zisis is talking about, or Mayank is talking about, in terms of suddenly pattern analysis will happen quickly, all fraud is detected, or all unwanted action is detected. Jury is still out, but it is only means one thing for me, that more transactions are becoming impersonal and moving to the cyber world.
Okay, that's good. This to Mayank. Mayank, obviously the usage of digital channels and digital infrastructure has increased over the pandemic, right? And there have been a lot of relaxations also to ensure that customers are able to access, use, and transact on it. Have you seen any increased security risk because of any relaxations that authorities might have done during this period, so and so forth?
I don't think that relaxation is the right word. I think the digital transformation is not new. It probably started into early 2010 when the adoption of credit card and debit cards started. Those were the newer payment methods, and initially they were exposed to a lot of threats because people were the understanding of people was evolving. The overall knowledge base around that was evolving. The bank systems were evolving. Then came the generation of mobile transactions, and these days e-wallets, etc. So relaxations, if you say, those have been only by the institutions or by the organizations which were not ready proactively to align with the demand of the time. So in an ideal sense, whenever you use the word relaxation, it obviously comes with a security threat. If you're relaxing something which is essentially needed to be safeguarding, whether it's a transaction or it's financial or non-financial transaction. So if it's anything that is being safeguarded by a set of policies and you relax that, it obviously exposes it to a threat. But I think banks should look ahead and be ready in time and not sort of wait for a crisis situation to rush into adoption of systems. So the digital transformation was always coming in. It started 10 years ago, and it's sort of the pace has in some cases sort of been pressed because of not being done sort of in time.
Oh, okay. Thank you, Mayank. This one is to you, Zisis. In terms of how often should a bank be conducting pen tests or penetration testing to ensure the network and the framework is remaining robust?
It depends on what they need to penetrate, what do they need to test. In terms of infrastructure, we usually deliver one or two penetration tests per year because the infrastructure is not changing very often. But in terms of web application and mobile applications, services that banks offer to the customers, and they are changing day by day, I think that after an initial penetration test, every time that there is a change, a penetration test should be executed. Every time after a big change, after a change.
Okay. Murli, one to you. Considering ongoing challenges and the cost of covering all these risks, if it is a small tier 2 or a tier 3 bank, I mean, what should ideally be the top 2-3 priorities for the CIO so that who may not have similar budgets to large organizations?
See, one is you cannot overlook. It's not an option.
Yes.
In the sense that customers' data, which is very clear in most of the advanced geographies. If you lose customer data, it is going to you might lose your shirt, and it's being misused. And if it is proven that it's a systemic break, we have had multiple situations where banks have been punished, big and small. So it's not an option. There are 2-3 ways in which one can look at it. Collect as much as you want. This is one. Some of the larger banks try to collect as much as information as they can because they have multiple products. Because the more data you collect, more is on you. So understand your products, understand limited information, collate that. You have to invest in ensuring that all the PII information is extremely secure. It is need to know basis, and it is kept in. So that kind of a system, whether you never should try to build it because with your budget you will not be. So you go with some products, and some products are also provided on the cloud, or not necessarily on the cloud, on a SaaS mode, in the sense that pay as you use mode. Even within the banks, many of them are starting to come up. It need not be a large investment. And most importantly, budget this into your product billing. Don't overlook it. It is not earlier days when you used to say that, okay, we have a centralized risk group. This is a key part of the business. And you need to make, however you look at it, you need to make enough budget to ensure that those audits are taken seriously. Like Zisis was talking about, if pen test is done on a daily, weekly basis, I would even go to the extent saying that it's not only when the changes are, I would want it as a part of, my constant look at, and, whatever things which is done in a similar manner. Anything which is, these audits are not sampling, because, you cannot, where I'm going with this is, you cannot reduce cost by reducing the coverage.
Right.
You have to be 100%. You reduce coverage by collecting less data. That is a mantra.
Right. Anyway, yeah, excellent. Thank you so much. Look, Murli, Zisis, and Mayank, thank you very much for joining us. We've reached, unfortunately, the end of the time period we have. Thank you very much to everybody for attending this enlightening webinar, and hope to have you again once again soon on our webinar series. Yeah.